Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And if you've ever wanted to know how to make equity happen and live wherever you want, then guess what? This is the conversation that you're going to want to listen to until the absolute last word, because today's guest was not only a professional real estate investor with investment and development experience in 9 states, and get this, 6 countries. He's also a former real estate agent that was ranked in the top 1% of his sales for the world's largest real estate organization. He also taught 4 years in real estate practice and appraisal at the college level. And he also co-authored a book called Equity Happens, Building Lifelong Wealth with Real Estate. And he's also, get this, he is best known as the founder and host of the Real Estate Guys radio show that, listen to this, it's been around for 25 years and listened to in over 190 countries. And it gives me great pleasure to welcome today's guest, Mr. Robert Helms. Robert, welcome to the show.
Hey, Billy, so good to see you, and thanks for having me on.
This is a lot of fun, and this is really, really exciting to be able to have you here and really talk about this whole concept that we really love, which is long distance investing. So, Robert, as you know, I love to ask everybody at least the same 5 questions, 2 in the beginning, and then we'll finish up with the Going Long final 3. But could you kind of help us understand, where exactly do you live in the United States?
Well, I was born and raised in California, spent most of my life there. That's where I taught college for those 4+ years. But about a dozen years ago, moved my family to the great state of Texas, Texan by choice. Love it here. It's in the middle of the country. It's in central time zone, and 2 big airports we can get almost anywhere.
Yeah, I love that. Great state of Texas. I spent about 7-8 years in my youth in the late 70s and mid 80s there in Houston. So
yeehaw.
Yeehaw. And cool. So great state of Texas. And Robert, what is the most positive thing that's happened to you in the last 24 hours?
Oh my gosh. Well, I had great news this morning, Billy. When I woke up, the first thing I did was check to see if there was a white chalk line around my body. And when there wasn't, I knew it was going to be a great day. So it's a gift and a blessing, and thrilled to be here. We've had some great things happen. Specifically, I just learned my 15-year-old has a 4.2 GPA. I don't know how you get to 4.2, but that's pretty impressive. And at the same time, there's always setbacks, which we like to refer to as new opportunities.
Oh yeah. So that is fantastic. And I love being able to take in the small things, which is really being able to wake up in the morning. And that is something that is super positive, and so glad that you help to remind us of those things. And then whenever you have something that happens with your children, that's always a wonderful opportunity and great reflecting point. So thank you very much for that. And Robert, I've talked about a couple of really, really high level things at the very beginning, but I would love for you to share with the entire Going Long family just a bit more about your backstory and kind of what's led you to this point in your own journey.
Well, it's a long story, but I'll give you the short version. My dad was an engineer by trade, but he got the real estate bug and he started investing in properties. And I was growing up when this was happening, and I kind of got interested in it. My sister had no interest whatsoever in real estate, even though she just sold her house after it had gone up in value by more than $1.5 million. But that's another story. I started getting intrigued by the fact that people lived in our houses that we owned, but they lived there. And then they paid us rent. We moved from Northern California to Southern California for 3 years. And when we did, moved back into the same house, which, as a young child, I'm like, wait a minute, this is the same house we used to live in. My dad explained that's because we owned the house and we had people living in the house while we were gone that rented the house and paid us. So I got intrigued by that. My favorite game when I was growing up was Monopoly. And Brian Tracy says, whatever you were really interested in between the ages of 7 and 14 is probably a clue to what you would be good at and enjoy when you got older. And my dad wanted me to join him in real estate, and I was excited by that prospect. And my very first commission check, I bought a duplex, and I lived in one half and I rented out the other half. And that was the start of my real estate investing career. And I continue to collect real estate to this day.
Love that. And being able to collect real estate and the benefits that real estate can provide is one of the most amazing things. And it also happened to me. By the way, my very first property I ever purchased was a duplex. So we'll have to talk about that one day, which will be
right
fantastic. Listen, Robert, so there is something that I feel like I have to start the conversation out with this one question, right? And like, this is like a dream being able to talk to you here and about this, but how did you come up with the phrase that you're probably, or one of the phrases that you're most famous for, which is live where you want and invest where the numbers make sense? Where did that come from?
Yeah. So there's a story behind that. I bought all my original real estate investing for my first 4 or 5 years in the beautiful state of California. It's where I knew I was an agent in the marketplace. So I just thought this is what you do. You invest near where you are. And then I met a really interesting gentleman, very successful real estate investor, and he had the 20-minute rule. He would only invest in real estate that was 20 minutes away from his house or closer. And I thought, wow, that's pretty restrictive, but he lives in a really nice area. So I'm guessing anything 20 minutes from his home is going to be, pretty nice. And then I thought, well, how far would I invest? Is it a county away, a city away? Would I invest in another state? And I was at a real estate event where I got talking to a gentleman, and it turns out you meet somebody at a real estate networking event, you tell them about yourself, what do you have? We had the exact same number of doors, exactly. And I'm like, well, that's really interesting. We have the same amount of real estate. Where's your real estate? He goes, well, none of it's here in California. I only own outside of California because the tenant landlord law is better, because the prices are better, and so on. And I said, well, that's interesting. All of my doors are in California because it's a state that appreciates, because it's beautiful, the weather's great. So we continue to have a conversation, and, we both had a different perspective. I will tell you that the aggregate value of my real estate was a lot more than his, but we had the same number of units. And so I started to think about diversifying my strategy just by having real estate in another place. The thing about tenant landlord law really rang true for me because I had been an on-site residential property manager in an apartment building as I was going to college. So in a short period of time, I learned a ton about the law in terms of tenant landlord and what you could do and couldn't, and the rules for deposits and just all that kind of stuff. In fact, so much so that when Russ and I first got together, a co-host on the Real Estate Guys, we did a class called Landlord Boot Camp, which was basically about California tenant landlord law. So I started looking into other places and realized that it was much more favorable in other places to the landlord than the tenant. California was then and still is a very tenant-friendly state. Doesn't make it a bad place. It just means if I'm a landlord, I better know that going in. I will tell you that a lot of other states are very more landlord friendly. And so just over time, we started to invest. We would bring a group of investors with us. And our claim to fame in the early days of the Real Estate Guys was we led our students to what became the number one appreciating market in the country 3 out of 4 years, the year before it was number one. So we missed one, but at 3 of the 4 years, the primary market we had focused on went on to be the number one appreciating market in the country. That's because we've spent a lot of time studying the market. Market analysis is still a big part of what we do. So it just opened my eyes to the fact that the world is a big place. Now, my first international investment was because of a whole different reality. And that was, we saw Las Vegas, Nevada go up 52.6% in 1 year in median home price. And I knew something was wrong. Today, I know what it was. But back then, I wasn't smart enough. I wasn't hanging around people like Peter Schiff and Robert Kiyosaki back then. I just knew that there was no way a market could sustain 50% increase year over year. And so we started to look around at other marketplaces, and I had been intrigued by a particular foreign market. So we started to invest there, and that went pretty well. And we just went from there. And that's how I got to a lot of different places. So I didn't start out thinking, well, I want to invest all over the world. And I still don't think that's a great strategy. I firmly believe, Billy, that you can only know a handful of markets really well. I don't know what that number is. It might be 4, it might be 8. I tend to think there's about 6 markets I know well enough to know when I see a listing if it's something I want to pursue. The other markets, I just don't know that much about. So live where you want to live and invest where the numbers make sense really grew out of the fact that some people live in a place that doesn't make sense from an ROI perspective or from a long-term growth perspective. And so just because you live somewhere doesn't mean you have to invest there. If there are opportunities outside your borders, which is what I love about what you talk about, is why not pursue those? It takes a little more knowledge. You're going to have to do a little more market analysis, and you're going to have to be aware of cross-border differences, whether that's a state or even a city or county in some places, or certainly internationally. But food for thought is you don't have to live in the same market you invest in.
Love that. So yeah, definitely being able to invest in different markets where it makes the most sense, and also love that story behind that. So thank you so much for sharing that with us. Really appreciate that. You also touched on one thing, being able to invest in a different market, but sometimes, especially in a lot of people that are listening to us are high paid professionals and are thinking, okay, well, I actually want to do this, but I'm just looking to get the best return. Now, I know you have a specific the way that you help so many people that are syndicators and also looking to invest, which is something that's called the personal philosophy around investment, personal investment philosophy. Can you maybe talk to us a little bit about what that is and why you have it and how that could help others?
Yeah, so the premise there, Billy, is no two investors are the same. When we decide to invest in real estate, it's usually for a reason, sometimes multiple reasons, but you can't be certain that the person sitting next to you at an event or across from you at the dinner table at night has the same goals and aspirations when it comes to real estate. And so in our book, Equity Happens, we have a whole chapter on your personal investment philosophy. And that's really running yourself through an exercise to determine what it is that drives you about real estate, the reason that you're interested in owning property, whether that's passively, actively, roll up your sleeves and get it done, or just own for the production of income. No right or wrong there, but you got to get clear on it. And the reason you do, if you're not clear, then any deal that comes along seems like it might be a good deal, especially if it has a fast-talking salesperson attached to it. You're like, well, that seems like a really compelling thing. And what happens is confusion. The greatest gift you can give yourself is clarity, really understanding what it is you're trying to accomplish. And for instance, you say, what's the best return? Well, that is a big old hairy, it depends, because what is return? You probably hear people talk about internal rate of return. At the real estate guys, we talk about total return, which are basically analyzing the 4 different ways we make money in real estate. And the 2 obvious ones are cash flow and equity growth. You can make a lot of money buying strategically in a market that doesn't cash flow if you know when to sell and why. Now, that's speculation to most people, but when we do it, we don't view it as speculation because we've been doing it a long time, and we can absolutely prove that equity happens over time if you buy in the right place for the right reasons. But most people think about a cash on cash return. I'm going to put some money to work and I want the tenant to pay all my bills and give me a little more besides. Great way to go as well. But you need to get clear on that, because if you mismatch your strategy with your market, bad things can happen. You know, you take the person that says, yeah, I want high leverage and I want low prices. Okay, that means I don't want to put a lot of money down and I want prices that are low. So you pick a market where that's available, and what happens is it doesn't go up in value. And so if the market never goes up in value, and say you're at a break-even cash flow, then what's your exit strategy? It's going to cost you to sell real estate. We can't trade in and out of real estate like you do in the stock market because of the high transaction costs, 6, 8, 10% every time we buy or sell. So we like to say that you get married to a market. And part of picking the markets to get married to is getting clear on your personal investment philosophy. And if you'd like, we certainly have a fun little audio workshop we can make available to your listeners if they want to go through the exercise. It takes about 20 minutes, and they come up with their own personal investment philosophy, or at least the start of it.
Yeah, I would highly recommend that we do that, and we're going to make sure that we include that in the show notes as well. So that is great, and understanding the fact that gives you, going through the exercise will help you to gain clarity, and then that clarity really to give you the power to not only decide on what you want to do, but to really be able to act on that, which I think is also something that you can derive from that clarity. I want to talk about another thing, because I know that as you talk about the helping people to gain clarity, and you've talked about where where you're live where you want to live and invest where the numbers make sense. But all of this is really there's an underpin, which is really the whole concept of education for effective action, right? Not just learning things, but actually getting into putting things into action. Can you help us understand where did that come from as well, and kind of the impetus for that?
Yeah, so that's been the motto with the real estate guys for many, many years, education for effective action, meaning that if you get educated and you don't do anything with that education, well, that wasn't a very good investment of time or money, was it? Right? You know, people who, spent maybe 4 years in college and they got a degree in something, but they aren't using that degree today because of whatever circumstance is. So I'm not saying that was wasted time or money, but the ROI isn't there. So the idea of education for effective action is that you want to use what you learn to propel you forward. It's obvious when it comes to investing in real estate. If you don't actually own any real estate after you've learned, it doesn't mean you go out the first week and you buy something. But eventually, if you're interested in real estate investing, you're listening to podcasts like this, you're studying, you're reading books, we would expect that to lead to an outcome, which is you own more real estate 10 years from now than you do today. And so that's really the idea of it, is not just to learn to impress your friends at cocktail parties or to consider yourself smart. There's a difference between knowing and doing. I was at an event with Mr. Jim Rohn many years ago, one of my mentors, and he said, Robert, I met a woman the other day who was in real estate, because he knew of my background, of course. And he said, and I asked her, well, that's wonderful. How much do you own? And she said, well, no, I sell real estate. And Mr. Rohn said, oh, okay. So you sell real estate. You're not in real estate. And so I made a goal when I was selling real estate to be my number one best client. I wanted the person that bought the most from me to be me. I wanted to be the guy who was buying real estate, not just helping other people. And so you want to get educated, because just doing something without learning about it also is a recipe for disaster at times. So you want to get educated, but you need to be aware of analysis paralysis. Those are the folks who just spend all their time learning and not doing. Had a gentleman at one of my events come up and say, now, Robert, I've read your book, and I've read all of Robert Kiyosaki's books, and I've read the Donald Trump books. I've read Gary Eldred's books. What else should I read? And I said, the purchase contract. That would be the next thing to read. Like, you always want to be putting good ideas in your mind, but at some point you have to do something with what you know.
I love that. Really doing something with what you know. And also, we're going to now move into another area that you talked about before, and it's not always about a financial return. There are other types of investing. For instance, lifestyle investing. Can you maybe share how lifestyle investing has impacted your life positively, and also how that may tie into going long and investing beyond your backyard?
Yeah. So, when you think about an investment, you typically have a duration in mind. I'm going to hold this 5 years or 10 years, or maybe I'm never going to sell. It's just going to cash throw off forever. Or other times, hey, this is an opportunity to buy something, add some value, and sell it at a profit. So part of the property acquisition is also what's the hold time. And I started out, as I mentioned, as an on-site residential property manager, and what we would probably consider a C+ building. Who knows? But that's probably about the level, meaning that it's not the nicest neighborhood. It's not the best property, but it made a return. And so sometimes you buy something just for the return. I put money out and I want it to come back with friends. But other times you buy real estate that you're proud of. You can drive by and go, whoa, look at my building. When we were developing in the early 2000s, we would often make it a practice to keep one of the buildings that we built. We built small developments of office or business condominiums, and we would sell them to business owners who could live in, work in the building, not live in the building, but work in the building and own the building. And we would keep our profit in buildings. So this concept is, not obvious to everybody, but lifestyle investing is investing in something that's a real estate investment that will make you money. It will likely go up over time because of demand, but it's also something that you enjoy. So for instance, imagine you love skiing. So you find a beautiful ski lodge that's available, and it's a place that you can rent out when you're not there. And when you go to ski, you got your own place, and maybe you even have a little locker where you keep your skis. So you ski a couple times a year, and the rest of the time it produces income for you. That's lifestyle investing. Maybe you like the sand and the water. Maybe you like boating. Maybe you like scuba. Maybe you like to go fishing. So investing around a lifestyle is just a little different way to consider your real estate investment return. Certainly, I want to make sure it returns. It's going to provide cash flow for me. It's not just going to sit there and cost me money. That's not an asset. Robert Kiyosaki would call that a liability. So instead, if I can derive income from it, if I buy strategically in a place that I expect the values to go up over time, then if I enjoy going there, that's just bonus. So my entire portfolio is not made up of lifestyle investing, but more so today than ever. I'm much more a pride of ownership investor today than I was when I started. When I started, it was all about the return, and I would be in difficult neighborhoods because the gross rent multiplier was better, and I could, work on getting the cash flows up. And I had no intention of ever living there or staying there. I just wanted the returns. Today, I'm much more of a lifestyle investor where I go see my property as it's paying me money.
Love that. So seeing the property while it's paying you money, it's also one of the wonderful reasons that the real asset classes can be fantastic. It's just it provides you another opportunity. So we're talking about the lifestyle aspect, which is something that's really, really nice. You are someone who enjoys long distance investing, international investing, and that's the great part about it. But maybe if you could tell us about some of the difficulties that either you experienced yourself or you currently see lots of students that you may have, or people that you come into contact with. It's kind of like the other side of investing long distance. The challenges.
Well, I'm glad you brought that up, Billy, because as you know, we like to teach the real world, the good, the bad, right? You want to have enough emphasis on acquiring assets because it drives you to reaching the goals in your life. But the reality-based side is that, most of life's problems come with hair on top. And, tenants are difficult, whether they're overnight tenants or long-term tenants or retail tenants, and things don't always go well in real estate. So I think the big picture on international investing is this. The minute you decide to cross over your country's borders, you just took on an order of magnitude more in your education, because you have to learn about things like the property rights and legal positioning and all the things that affect real estate on a global level that you might take for granted wherever you live now. If you live in the UK and you own in the UK, well, you're used to it, you know it, it's all good. If you live in Spain and you own in Spain, you know what that's like. If you live in the US and you own in the US, but the minute I go somewhere else, I can't assume that they do it there like they do it where I'm from. So there's more education involved. I think what happens is people assume that because, say the contract, they read a contract and one side is in a foreign language and one side is in English. And they go, well, the English side looks good to me. I'll sign the contract. What they fail to realize is that if there were to be an issue or dispute, that the language in the local market is what prevails, and English is simply a courtesy translation for folks that don't speak the language. So that's just one small example, but you do have to dedicate yourself to really getting in and getting educated and building a team. We're big on putting a team together. It's critically important if you own real estate that you have a team, and that includes everybody from your real estate brokers to lenders to your accountants and legal team, and even the people that do work on your properties. But when you go internationally, it's that much harder. I rely on property managers for pretty much everything in my portfolio, but I really rely on them in, say, my investments in Australia, because that's a long way away from me. And if something were to happen, for me to even get there, I can't even be the guy in charge, right? So I have to have a great team that I know and trust, that I have vetted, right, to handle that. So as you're thinking about, I'm a big fan of international investing, not trying to dissuade anybody, but you have to go in eyes wide open and just know that there's a lot more to learn. I have found that if you will go through the trouble to learn, it will serve you well. In many of the investments we've had internationally, we run across, some strange little thing that has come up because of the foreign jurisdiction it's in. I always look at it as a great thing, because we just figured out how to navigate something that leaves our competitors further behind. So it's worth doing. It's worth the diversity of not being tied to one nation's economy and currency, but it does take some work. So make sure you're willing to do that work.
So yeah, and I think that I appreciate you sharing the other side of the coin, right, and then helping others to make the decision that's the best for them, and just giving everyone the real scope. And at the same time, you talked about teamwork, right, and you talked about teams specifically. And for those people that are interested in investing beyond their backyard, long distance, international, however you want to call it, and may not have the experience, Robert, of really understanding how they could vet a team that really understands a location, could you maybe help to educate us on some of the things that you could really look for?
Yeah, for sure. So two ways to invest internationally. One is passively. So you're going to invest with someone who is either a developer, a syndicator, someone who is out there doing all the work, has those relationships, has come before you into the marketplace. And your job is to vet that person and to do your homework and due diligence and see who they've put in place. The other way is if you're more active, you want to go buy, maybe it's a simple idea of that, hey, I want to buy a house in another country. I go there a lot. I understand it. I see what's happening in the market. I think it's going to be great. Well, now you have some people you've really got to have on your team. And as much as this doesn't sound like the right answer, I like to start with the legal side, meaning I want an attorney in that jurisdiction that can talk to my attorney here because they can talk at a higher level than me. So I just have a full understanding of all those things I don't know. Because you go anywhere new and you just don't know what you don't know. So I think a shortcut on that is to find out from legal counsel and then a property manager, not a real estate broker. I love real estate brokers and agents, love those people, but they're salespeople, right? A real estate agent will go, oh yeah, this will rent for $1,200 easy. And you talk to the property manager and they go, $975 tops. Because the property manager is the one that has to find the tenant that will live there, and they know. So I'd rather find out from a property manager how much are these units in demand. If you were me, what kind of a property, location, number of bedrooms, bathrooms, what's going to rent the best, right? They're going to be able to tell me that. Then I find a broker that knows the area, and I love a referral. So if you know someone who's already there, that's great. Absent a referral, I like professional organizations. Just a few weeks back on our radio show, we had Scott Abernathy, who's the incoming president of the National Association of Residential Property Managers, which is a great organization. And if you were looking for a property manager in the U.S., the local chapter would be a great place to start. If you're looking in a foreign country, then find out where some of the trade associations are. And many times the most reputable people flock there. So what I have discovered is that the person waiting to talk to you about real estate at the airport is usually not the A player. And we want to eventually get to the A players in any market. And it just takes some time. You got to sometimes kiss a lot of frogs to get to the right people.
It absolutely makes sense. And thank you so much for sharing that. And, there's also the part of technology, right? Technology, especially when you are long distance and you're either wanting to build a relationship directly or passively, right? Actively or passively. So maybe you could talk to us a bit about how technology is playing a role, potentially facilitating things, and maybe where it could potentially be even a drawback. If you can kind of give us both sides of the coin on that one.
Yeah, so technology has enabled us to do all kinds of things better, faster, easier, and real estate has been a beneficiary of this, especially long distance, because just through management software and the ability to do, walkthroughs remotely and just all that kind of stuff, it really is helpful in our due diligence and market analysis. We certainly use technology in those ways, and it gives you the ability to get to specific data a lot quicker. So I think that's the good part. The challenge to technology, especially internationally, is that not every answer is found on the internet. I was just at our Belize discovery trip. So we take investors to different marketplaces and, tell the story of the market. We're not there to sell property. That's not what we do. We fit that market piece. Here's what the market's about. Here's what the drivers are. And there were two lessons that I taught there, both of which will make no sense out of context. But afterwards, I said, now, how long would it have taken you to find out what I just taught you on the internet? And basically, everyone said, never. We would have what you just taught us, we could have never found. It's not on the internet. So here's the challenge. Some people rely so much on technology, they expect it to do the work for them. And this is not for you. My favorite example, people always have their spreadsheets and they always have a 5% vacancy allowance. Well, I'll tell you what, there's probably not been a market in the history of the world that has been 5% vacant. If I'm buying a single family house, it's impossible for it to be 5% vacant. It's either 100% vacant or 100% occupied. And yet, for whatever reason, lazy investors just plop in that 5% number. You've seen it happen. Instead, you have to go to the market to determine the vacancy, and even more, the sub-market. Get to the property manager and say, of these types of properties in your portfolio, Mr. Reputable Property Manager, what would you say I should keep as a vacancy allowance? That's the number to put in. So sometimes technology is helpful, but sometimes it makes us lazy.
Yeah, and completely understand and love what you just said there as well, because you're going back to one of the key members of the team, right? Which is the property manager, and contrasting what needs to be done or what the reality is, and then using or leveraging technology so that you get a much more precise vision of what the situation is, and then from there you make your decision. Love that. You also mentioned a couple of names in the beginning, one of which was Peter Schiff. And sometimes people may think, well, Robert Helms, he's the original real estate guy. And so why would a real estate guy be talking about someone who is not a real estate guy, someone who people perceive as a commodities guy, a gold person, a silver person? Like, what's the deal with the combination of real estate and the macro environment? Help us out.
Love that question. And we're pretty excited about that. For folks that haven't heard your episode with my partner, Russ Gray, the co-host of the Real Estate Guys, you did a 2-part show with Russ, and he has really embraced this. And I think everyone needs to understand that as real estate investors, we swim in an economic sea that is affected more than just real estate. So in order to really be a competent real estate investor, I have to understand investment in general, and the compared to what. If I'm going to put money in real estate, it's prudent of me to say, well, I could put it somewhere else instead. So I want a cursory knowledge of all those areas. How it played out for Russ and I is that we were very real estate centric. We were speaking at real estate conferences. We were going to all kinds of real estate events. We were, just immersed in real estate. And we didn't know much about anything else. And then 2008 came and handed us our lunch, and we went, wow, we didn't see that coming. Well, who saw that coming? Who saw the 2008 crash coming and wrote about it in 2006 for the exact reason it actually happened? A lot of people claim to have seen it, but I only know one guy who put it in writing, and that's Peter Schiff in his book, Crash Proof. So when we read that, we're like, I don't know how he knew, but we got to get around this guy. And the first time we had him on the show, he's like, well, I don't know how you couldn't see it. Well, that's because he's a smart dude and he pays attention, but he got us thinking differently. Peter's not a real estate guy. I like to say that Peter has predicted 19 of the last 2 recessions. He's definitely the guy who's watching the horizon. Now, Peter's become a good friend all these years of hanging out together, but he expanded my thinking. Hopefully today, you and I are expanding people's thinking, and it never hurts to get your brain bigger. So understanding that compared to what, I'm still very real estate centric, but today I know a lot about oil and gas. I know a lot about precious metals. I know a lot about the way that interest rates in the bond market works, because I need to be a good investor. If I'm just investing my own account, it's a good idea. The minute I cross the line into raising money, doing real estate syndication, now it's imperative that I'm paying attention. So it doesn't mean you have to get bogged down in all of it. You just have to learn. One of the things that people may not understand is that precious metals are money, and precious metals have been around for a long time. And yet the average American owns less than 1 ounce of precious metals. So the minute I make a determination to study precious metals, which I don't think are an investment, by the way, but I always have some, because an ounce of gold has no counterparty risk. If you don't understand that, Russell Gray could talk to you for hours about that idea, but almost everything else we do as an investor has counterparty risk, a problem that could arise because of someone else's doing or situation. That's not true for this ounce of gold. If I have an ETF that's gold, there's counterparty risk. If I own a mining company that mines gold, there's counterparty risk. But for that ounce of gold, it is nobody else's corresponding liability. So there's a lot there. But that's why we pay attention. I still believe real estate is absolutely the single very best investment there is, but it's not the only thing I own, and it's not the only thing I know about.
Love it. So very well rounded. So help us understand. So why do you believe that real estate is the best asset out there?
Well, the best reason is that it's not discretionary. So follow me on this. No one ever has to invest in an IRA or buy a share of stock or a barrel of oil or an ounce of silver. You never have to do those things. Any of those investments, the bond market, whatever it is, 100% discretionary. But real estate is not. It's impossible for the vast majority of people to sit out the real estate market economically. You don't have to own real estate, but most people who don't own real estate pay rent to guys like you and me. So you can't say, I mean, unless you live under a bridge and even then you're interacting with real estate, it's virtually impossible to not have an economic relationship with real estate. So if that's true, it's not discretionary, then we know there's going to be demand. You know, Russ and I hail from Silicon Valley in California, where we spent many, many years and got to know each other. And it's one of the technology capitals of the world. And I don't think they're ever going to figure out technology that eliminates the need for human beings to sleep under a roof. We interact with real estate. It's a hard asset. It's a real asset. And it's got leverage. It's got tax benefits. It's got an imperfect market, which makes it awesome. You know, people can do well in the other markets, but a perfect market is hard to have an advantage in. An imperfect market like real estate is awesome for that. If you'll be a little more diligent, study a little more, get a little better connected, have great relationships, you will come across deals that the average person never sees.
And so the fact that they'll never see them, and I also want to highlight one thing that you say, and it's very important for those of us that want to continue to increase our intelligence, our awareness, that Robert really talks about the real estate market, right? And I was intentional in not saying asset class. Some people have always heard that real estate is an asset class, and it's an asset class. I kind of know why it's not, but could you also just help to raise that level of awareness for people when we talk about why real estate is a market or a specific asset?
Yeah, because every single piece of real estate is different. Even in a tract of homes that were built by the same builder at the same time, over time, those homes change. Some deteriorate, some get redone, the value changes. Now layer onto that the income. I can be looking at two apartment buildings right next to each other that have vastly different valuations because of their income. And so real estate is totally unique. We say in real estate, location, 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 and that's true. There's also an adage that price will sell any property, and I believe that to be true. If you have a property in the market and the average days that properties like yours are on the market is 90 days, and you're on the market 91 days, then I know with absolute certainty that your price is too high. That's how markets work. And so an asset class is something that is all the same. Every ounce of gold is the same as every ounce of gold if it's a real ounce of gold. Every barrel of oil is the same as every barrel of oil. Now, yeah, you can read about light, sweet crude and all that. And you want to get more into what those markets are and the distinctions. But in general, people allocate their investing to different classes. Debt and equity are classes. Real estate is so different because of the myriad uses surrounding real estate. Real estate has economic use, but real estate has all kinds of other use as well, public works and parks and all kinds of things. And as we say, they're not making any more real estate, which, by the way, isn't exactly true. This last weekend, I showed people that some real estate that was recently made in beautiful Belize. Anyone that's looked at Dubai probably knows that you can make real estate. But in general, the idea is it's a scarce resource. And because of that, and because especially in certain places, it's more scarce, scarcity in real estate is what drives value. There's only so much in this zip code. There's only so much in this school district. There's only so much real estate that is near the university. Whatever that is, that's what makes it unique and makes it not just an asset class. You can't just say, well, yeah, I invest in real estate. Well, what does that mean? Right? There's so many different places and demographics and styles and reasons for investing in real estate that it just is very different, very unique.
Perfect. And I really appreciate you taking the time to help us be more aware of that, because it's such a critical thing. And I remember when I heard you and Russ talking about that the first time, like the light bulb just went off in my mind. I was like, oh wow, yeah, this is absolutely correct. So thanks for sharing that with the Going Long family here. So Russ, Russ, you got me talking about you and Russ. Robert, before we go into the final, the Going Long final three, I know personally, I have benefited from a lot of the passion that you have around the area of syndication and really helping people. I would love for you to take maybe a couple minutes to talk to us about why you see real estate syndication as, probably one of the best opportunities that exist today, and also this passion that you have about really going out to help so many people around the globe get involved in syndication in a way that is what I consider to be one of the absolute best ways to learn and be involved in a community.
Well, Billy, when you get the real estate bug, like my dad did, like I did, like you did, what happens is eventually we run out of our own ability. We run out of our own money. We run out of the ability to qualify for loans. And what many people do at that point is they stop. They say, well, I don't have any more money. I just won't invest anymore. That's crazy. This is not for you. What real estate syndication allows you to do is to aggregate the efforts of others. So most large scale investments, picture a 300-unit apartment building. Most of the 300-unit apartment buildings in the world are not owned by a single individual or family. Some are, but the vast majority are owned by syndicates, groups of people in some format that put together their resources to go do that. And what's great about syndication is, one, it's a great business opportunity for any real estate investor that wants to kind of get to the next level. It's the natural evolution of a real estate investor. But two, it creates opportunities for both the active person that wants to really take advantage of all the lessons they've learned, their experience, their relationships, and really, take that to the next level. But it also allows people that do not have that level of energy or enthusiasm or time to still come alongside and invest. I might love what I do for a living. If you're listening to this and you kind of dig your job, but you just want to passively invest on the side or maybe add a few properties to your portfolio, then passively investing in a syndication gives you the opportunity to be part of a bigger deal than you could do on your own. And often those are better deals because they are completely professionally managed. The person that goes out and puts a house in their portfolio and decides to collect the rent themselves is going to have a different level of experience than someone who hires a team that's been doing it for 20 or 30 or 40 years. So to me, syndication is a great way to diversify your risk. It's a great way to get the benefit of real estate without having to do all the work. And if you've built up the experience resume to do more deals and the only thing you're lacking is capital, well, then syndication allows you to do that. It's a team way to invest. Instead of every investor being their own maverick, their own eagle on the hill, it's a way to come together and take different resources, some people's knowledge, some people's relationships, some people's capital, put that together to accomplish more.
Love that. So being able to come together, being able to accomplish more. And as I mentioned before, I know that you have a lot of passion behind this, really do a fantastic community that is being built that I participate in. And so it's one of the things that I really, I talk about it all the time, but I really appreciate you sharing that and the reason for really pushing and building the community and helping syndicators to be able to go bigger and faster. So,
well, and a quick thing there, Billy, if you're just an individual investor, you don't have a financial incentive to tell other people what you're doing. If I find a market and I'm getting great deals, as soon as I tell other people, well, maybe the deals are now more scarce. In syndication, it's the opposite. We all benefit from each other, not necessarily economically, but when you have experience and you go through something good or bad, the rest of us can learn from that. And the community part is such a big part of it. It really is a team sport, syndication investing. And therefore, you've got a community, a team, a sounding board, a backstop. When you go through something, there's a good chance someone in the community has already done it. And so we learn from each other as much as we learn from, the faculty, if you will.
Absolutely. And being able to have lots of tribal learning and sharing. And it's just, it's phenomenal. So thank you for sharing that. And you know what, Robert, I want to continue to talk to you forever and ever and ever. But the thing is, at a certain point, we have to kind of get to the going long final three. So the thing is, I never ask the going long final three unless you tell me that you're ready for me to ask. So are you ready?
I am ready.
I know you were born ready. So here we go. So the going long final three, we started on your side of the pond. Now we're going to bring it back to this side of the pond. I would love for you to share with me and the going long family, what is your favorite European city, either that you visited already or is still on your bucket list to visit?
All right. Well, I got a bunch on my bucket list because I've only been to Europe twice. And once was for 27 hours. So Russ and I flew to France, to Paris, and we were there for 27 hours to do a prestigious radio interview and fly back. So I don't even really count that, although Paris was awesome in 24 hours. I spent a longer trip in Austria and Germany. So I've not been to Spain or Portugal or even England, but I loved Germany. Kind of a beer guy, so I made it my mission to try 2 beers every day, which I easily did. And then we were there for Oktoberfest, which was fabulous. I think my favorite little city is a place called Füssen, or Füssen, they call it in Germany. Just a quaint little town, but they had the most amazing beer, and I met really cool people there. I will say I'm no expert when it comes to Europe, though, and so my plan is to take my family and spend more time there because it's an amazing place. And not only do I want to see more of it, I want to get to know it better.
Awesome. So we're going to, Füssen, Germany is there. And when you're ready for Barcelona, if that's one of the stops on your trip, you know where I am. So we'll be ready to welcome you and the family. So listen, the other thing is I always talk to really, really successful people, and really successful people like yourself, Robert, and typically have only made one mistake. Okay, maybe more than one mistake along the journey to become successful, and not necessarily making the mistake or the learning opportunity or whatever. But if you could think of one thing, one lesson that would really help the Going Long family, what is that one lesson that you would pay forward to us?
Yeah. So if this was the Going Broke podcast, I'd have a lot of ideas for you. And I've made so many mistakes, we don't have enough time. But I will say that they do all kind of fall under one thing, and that is trusting the wrong person, putting the wrong person on your team, jumping in because you're excited before you do the research. So here's a premise. You don't have to all of a sudden meet somebody at a real estate event and decide we're going to be partners forever. You can do a joint venture. You can put your toe in the water. You can try to collaborate a little bit, because over time, you will figure out who people are. We say that time either promotes you or exposes you. Everyone seems awesome at the first meeting, but as time goes by, they start to reveal their flaws. We all have them. I'm a firm believer in partnerships. Almost everything I do is with a partner or partners. And my belief about partnerships has been shaped by going through this very thing, by choosing the wrong partners. Very, very expensive lesson for me, but I got the lesson, so it was well worth it. Today, I have rock solid partners. We know each other well. We know where our strengths and weaknesses are, and we come along each other so that my weaknesses are covered by somebody else's strengths and vice versa. And I think the biggest thing is that partnerships can be some of the joy in life, but it's also some of the ugliest, awfulest things you can go through. Nothing worse than betrayal. So we can't prevent it, not 100%. But my dad used to say that the information about the relationship is usually available at the beginning if you choose to heed it. Russ and I years ago got involved with a really big real estate deal, the biggest deal we got involved with. And it was a gentleman who was the developer who came from another country. We discovered about 4 months in, and we were pretty far in at this point, that this man was cheating on his wife. And I tell you, we knew about his character then, and we should have followed our gut. If a man will betray his most sacred relationship, then what's going to happen to his business relationship? I mean, it was clear. And in hindsight, my dad's words were ringing in my ear. The information about the relationship was available. So they say, when should you fire somebody? The moment it crosses your mind. It's the same way with getting into a partnership. Be slow to get into partnerships, and then make sure you continue to communicate so that the good ones can stay the good ones. I think that's the lesson for me, is I'm very slow today to jump into a partnership with somebody, but I'm always looking for a great partner.
Okay. All right. Thank you so much for sharing that, and love that story. And that is something that we are all going to benefit from, and keep that in the back of our mind, and always be thinking about that as we look to partner and bring on the right partner. And you know what, Robert, we're at our last question, and it is really about being able to feed the mind. And I know this is something that you are very, very big into in terms of being able to read. So what book would you recommend to the Going Long family?
That's such a hard question because there's so many great ones. Like you, I've got a bunch of books I haven't read yet that somebody recommended to me, and that's on my to-do list, and that changes, right, as time goes by. But I would have to say, to pick a book that isn't as mainstream as maybe some of your other guests, Turning Pro by Stephen Pressfield. It's short. You can read it in a day. It will kick your butt in an awesome way. There's more to that story. He's got a couple of other books that kind of revolve around that, but I think that's a great place to start. It's not his first book. He's just a different kind of speaker, at some of the events we talk about Mr. Pressfield, but Turning Pro by Stephen Pressfield. Have the guts to read that book.
Yeah, Turning Pro is an amazing one, and we talked about that at the Goals Retreat, and it was a phenomenal event that you put on to really help people gain clarity and looking for setting their goals off in their year in the right way. So thank you very much for sharing that. Also, too, it's just I get a lot of inspiration because I do a lot with my children, and this is just kind of off the cuff here, but being able to see the way that you had the opportunity at such a young age to work with your father and be able to learn, and now seeing you do the same thing with your children, I think is phenomenal, and it's something that I continue to work on, making sure that generationally that we're continuing to educate and lead in the right way. So honor being able to have you here, and also to just being able to watch the relationships that you've had. So this is really, really, really awesome. So thank you for sharing those things. And Robert, I just am kind of going back to the conversation, and I know you've shared so much with us today, and helped us understanding, really about how you can go long and how you can do that in the right way, and being able to team in the right way, and being able to think about locations and thinking about the different members of your team. You talked about so many different things, and I know so many people, we talked earlier, 190 different countries are able to listen to you on a weekly basis. And for those of those people that are maybe hearing or seeing you for the very first time, we talked about earlier, we're going to help them understand how they can get clear on their personal philosophies, or we're going to include that in the show notes. But how can people find out more about you, Robert, and more about what you're doing at the Real Estate Guys radio show?
Well, probably the easiest way with an international audience is to find our podcast, which is available on all your favorite podcast venues. The Real Estate Guys has been on traditional radio for 25 years and podcasting for a long time. realestateguysradio.com is our website. And if you're interested in going through that audio workshop on personal investment philosophy, all you have to do is send an email to PIP, personal investment philosophy at realestateguysradio.com. And you'll be able to do that when it's convenient for you.
Fantastic. And we'll include both of those in the show notes as well. And like I said, Robert, thank you so much for investing your time with me and the entire Going Long family today. It has been really an honor, and thank you so very much.
Thank you, Billy. It's great to see you, my friend, and thanks for having me on the program.
All right, awesome. And just very quickly to the Going Long family, once again, thank you for investing your time with Robert and I today. It's been fantastic. He's left so many gems, and we would love for you to go ahead and share today's episode with at least 2 or 3 other people. You can be that person that really helps to make a positive impact on someone else. We would love to have your review, help understand what is it that you liked about today, what would you like to know more about, so that we can go through or read every single one of your reviews to consistently make sure that we are bringing you more and more value here on the podcast. And also, I'm really looking forward to welcoming you on the very next conversation. And until then, I want to wish you a wonderful day. So go out and make it a great day. Thank you very much.
Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.